Hello everybody, it's Nikos here. I hope you can all see my chart and you can hear me. Just a couple of yeses. Okay, that's okay. Perfect. At last the chart is moving again. That's a good thing because lately it was a little bit boring, and there's always a reason when I say I don't like the charts much. And as I said, this week and last week was not that great. Now that we have a little bit of volatility, we can look for new setups at least. Okay, let's start with the euro like usually. And as you can see, it dropped, touched the 236. Of course, this is always a little bit funny if we don't have enough candles, retracement candles, and some spikes here. You can always draw your support line different ways. You can draw it like this or like this, depending on where it ends up. But that's why you also have later on the lower time frames, right? So yes, you have the three touches here, but on the daily chart, this was the weekly, we draw the lines differently yesterday, because at that point in time yesterday we had this scenario, right? We had three touches and we had small bounce of about 100 pips after the touch. So now that the price broke that line, of course this line in terms of looking for support is not valid anymore, right? It was valid because we had the bounce in this area and extended the two touches here, but now that the price broke, this is not important at that moment. It can be of value again if the price retraces back to the 36, trying to find let's say resistance. Okay, let's get back to the 36, close to this line. Sometimes a combination of previous support will act as resistance, but right now that line, sorry, just deleted it, is not that important anymore. So what is now important? Price action, next support areas, looking for setups now that the daily trend line, this one, is broken. And of course, as I said, if you draw the line with a different angle, a little bit like this, then it's getting closer to support. Or you can also cheat a little bit and change it like this, but that of course is not doesn't mean much, because you have just to get used how to draw a line correctly. It's not that difficult. Here you don't need a trend line. What you need here is to figure out where support is. You can go also back to the higher time frame, but actually it's better on this particular time frame to figure out if you have some spikes pointing out in this area. So you have previous resistance, December from last year, you have a touch there, here, a little bit here, not much actually, but yeah, you have a little bit of history here, here and here, in combination with this, with the 200 EMA, this area, okay, from here to down here where we have more touches, right? Look at this. Let me give you the whole area. So we have touches there, here and here, but we also have touches here and here that are pointing out, and here, and also bounce on the 633 after a false break on the 200 and 633 here. So this whole area from here to here is our next support. It doesn't mean that we it frightens us or something. No, we just need to know where the price might bounce and create this 1, 2, 3 we are looking for. Okay, right now, because now that the daily trend line is broken, we might see a bigger move to the downside. Remember, let me zoom out more on even on the daily chart, but also on the weekly chart. This whole area down here, and right now the most touches in this area would be here, okay, in combination with previous touches also, or if you like to use the highs, I don't mind, but what is important that you that we see that if the price comes back below this area here, it's already over, the price already bounced in this area. There was a false break. Okay, you can even leave it there, it doesn't matter. Why? Because if the price moves lower now, we cannot trade, or we cannot treat this as a big trend anymore, even if we get a nice setup here, right? A 1 2 3. If we get this setup on the daily chart, we have to treat this as a range trade. It's a big range, but it's still range. Yes, we could still have higher highs, lower lows and lower highs, and a trend in this range, but most likely, because the price did show us this behavior in this area, we most likely see a bounce here again before the price moves up or down. Okay, so ideally right now, because of this ranging scenarios on the euro-US dollar, what we need is a confirmation that this is not false like this one up here, and that means we need a 1 2 3 setup, a clean, clear 1 2 3 setup on the daily chart. The price has to stay below 1.35, right? Or 34, sorry. If the price stays below 1.34 and we get a daily 1 2 3, then we can seriously look for 4-hourly, 1-hourly short setups, because this would confirm the direction and the move in this range. Is it clear so far? This is for long-term traders, swing traders, daily chart traders, right? Okay, here. Now, for everybody else, the scenario is the same. Okay, it doesn't change much. The only difference here is, if you also like to look for intraday trades, what you can do already without having the daily 1 2 3 confirmation, the conservative way to trade, that would be the 4-hourly 1 2 3. Look, with the range up here, we had the little bounce there. Price only bounced about 90 pips and then it just dropped. What kind of news did we have? It's probably caused by news, right? Because it was a little bit, it was huge. Look at this, price bounced. It didn't even touch the 36. Now, on this lower time, on this 4-hourly chart, because this was a very, very powerful move, we have now to wait. We cannot jump in, okay, just because the price already moved 200 pips. It could be that it's retracing, or that this whole thing is false. Remember, if that's caused by news, you'd never know. And I wouldn't just jump in just because it looks great right now, because if that retraces 100 pips or more, you are out anyway. There are no setups. So what you need to see, at least look at the 1-hourly chart, at least a 1-hourly or 4-hourly 1 2 3 setup before you can do anything. It's over, yeah, in terms of setups right now. There were 5-minute setups on the USD CHF and other pairs. I don't even know if we had any on the euro. Let me check. Aggressive setups for day traders. The setups were good as setups, because it's difficult to see here because it was so quick and powerful. I don't know if you can see it up there. If you just look at the 633 and 200 EMA, it's really difficult. Is there another way to do that? Probably not. It's immediately changing. Let me draw the lines. Here it's dropping, right? It's really dropping quickly. I'm not going more to the left because it will destroy the chart again. What you see here is a lot of lower highs on the chart, range bounces on the 200, price not going anywhere, and then suddenly it's dropping. It's also breaking the 633, finding support on previous lows, and creating actually a textbook 1 2 3. Why a textbook? Not because it looks so perfect in terms of a setup, but in terms of retracement. Okay, so we have a move of 15 pips, and then a retracement of 13 pips, which is almost, it's over 70-80%, right? It's almost 100 pip retracement, exactly back and touch the 636 and the 200 EMA. Then you get your 2 to 3 line break candle and actually an entry candle. Now if you're scared because you have the 633, the next candle breaks even that, and then you have a stop of minimum, like always, 10-15 pips, not less than that. A lot of touches, and some traders a little bit more experienced, they know that if all EMAs are squeezed like this, okay, together, they start trading the 5 minute 1 to 3s every time they get a chance, and if they don't work out, they immediately close the positions and look for the next setup, maybe in the opposite direction. It's very important that you stick to the entry and exit rules if you trade aggressively like this without a lot of top-down approaches and everything. But I would not advise you to do that. Stick to the rules. Go for the top-down approach first, then for the setups. Here, if I scroll low, you have another setup here, tiny one below, that would confirm that the price really wants to move lower than this one. An entry here, stop again about 15-20 pips, and then crazy what happened. So the chart already knew that this was going to be something bad here. Price moved down a lot. Look at this, like 200 points with no retracement. That's really a lot. So we need to see the price, the chart, we need to see it relaxing first. Okay, let's see what happens, what happened there, or what will happen here. So don't jump in now, forget that. Okay, forget that it moved down. Don't get nervous just because it moved lower. It's a good sign. It means we have a little bit of volatility. Now if the price comes back and does not stop there, so it's not creating 1 to 3, but actually comes back to where it started and start ranging again, then you know that that was false and just caused by news. That's why you have to wait. Okay, you don't try jumping in somewhere just because it suddenly moved. Okay, now we have to wait for the setups, but as I said, it's a good thing if we have NFP tomorrow. If we have some setups in making, that would be great, because it was really lazy the previous days, the charts, right? Australian dollar, US dollar, not that big. The reaction was not that big. Yes, it went down a little bit. We have that weekly chart still pointing down. Now if you're already long since here, watch closely. If your price creates a new low, you need to start looking for management to get rid of the remaining position. Okay, but that's okay. USD CHF moved up, so it did not move lower in the end. Everything in terms of shorts are over. Now there were, I think, opportunities on lower time frames again aggressively. Look at the 1 hourly chart. You had support here, and you also had resistance here. You had kind of a wedge, right? Now on the 1 hourly chart, and I think, I'm not sure, but I think we had 5 minute setups here earlier. It's also again a very good example. There we go. Here's your support line. Let me get rid of this one. It looks creepy again. Okay, let me do it like this. There we are. Come on. So you have your support a little bit here also, and more there. Then you have your first 1 2 3s. after this wedge, you can ignore the little one here, and then you even get another 1, 2, 3 afterwards, like this. And the price, that is more for day traders, right? The price moved above the 200 and the 633, so all EMAs kind of squeezed together. The price stayed over there on the higher time from the 1 hourly chart. You had this wedge, and then you get your 1, 2, 3s. The price stays actually over both major EMAs we are using, right? Then you get your entry candle with a stop of about, what is it, 15 pips, not much, because you have to put it now below the 633, 12 plus spread, and that moved up like crazy again. So another good day trading 1, 2, 3 example with a filter using the wedge on the 1 hourly chart. Okay, always of course according to the rules with the direction of the main trend, ideally on this particular time frame you want to use if you are into intraday trading. Okay, UBCHF is the same, a retracement only to the 12 EMA since yesterday. Price went up, it only went to the 12 EMA. On the 1 hourly chart you had a 1, 2, 3 here and another 1, 2, 3 here. Also a wedge, but also 1, 2, 3, touch on the 36, 5-minute chart, support line here, a 1, 2, 3, another 1, 2, 3 here, stop below the line, about 17, 18 pips, 50 pips, and then include the spread. Remember, it could be 4 or 5 pips, so you have a stop in this case down here of about 20 pips. And here, below that line again, plus the spread, about 25 pips maybe. You see here the price even went against you and went down to here. So that is again important to that you check. Let me draw it like this, it's spiking there a little bit, that you make sure you don't have your stop like 1 or 2 pips below 0.3, right? At least 5 pips or 10 pips, and include the spread if the chart looks spiky and you don't have nice clean support lines you can draw like this. Always a little bit bigger stop is a very good example. This is a very good example, sorry for that. Also, let me take a look here. It's really difficult with this big screen. It doesn't with this big spikes here. Okay, the price, you had an entry here, stop below here, and including the spread. It could be, depending on the broker you have, that at this point you get also stopped out if the broker is not that nice, okay, compared to the first setup where the entry is a little bit earlier and then the stop is down here plus the spread. Okay, so look, compare this example and this example. Okay, price went up, good stuff. Again, this is for day traders, not for swing traders. We still have to wait for setup, and on the daily chart we didn't get anything. The price just exploded, yeah, it just moved up. So ideally we need to see something like this happening. But I'm happy that we have some movement again. It was really boring lately. Okay, so ideally a break of resistance would be great. Then a 1, 2, 3 like we had it here. Okay, I think everybody agrees. USD yen. Ejan, are you still hedged up? We had the hedging example from yesterday. I just want to discuss this again because it's It's about hedging, and hedging is a very, very good technique if you know how to do that. Okay, well done. So you hedged, let me explain again, and that's a very good live example here. Most of you probably remember, but because I'm recording the session, it's something to you want to remember, and you can take a look later on. Okay, so we had, remember, on the daily chart we had a wedge and a range on this pair USD, and every time the price came close to this line, touched it or broke it, and then we got our first red candle. We had bounce trade entries, or of course the lower time frames, higher highs and higher lows if it's for longs, or lower lows and lower highs for shorts to trade the range. So on support we were looking for touch and resistance, and the other way around for the shorts. And down here, because this range was getting smaller, Jan wanted to take the long, the bounce trade, but because it was smaller here, he didn't aggressively use the 4-hourly first green candle. He waited for the higher low on the 1-hourly, 4-hourly chart. He took this trade and I think had a smaller stop. I'm not sure. I think he took out the first and second lot when the price reached resistance, and after he saw the first red candle, which now is again a short trade, right? It's a short bounce trade, but because this wedge was getting smaller, and the distance between support and resistance of course smaller, what happened, he said, instead of going short and getting rid of the longs, I will hedge up the position, which means he took a short according to the aggressive bounce trading rules, first red candle, okay, and also kept the long. Now, as I said, if you are based or live in the USA or Canada, I think you're not allowed to do that. You cannot hedge up a position. You cannot be long and short at the same time, but everybody else still can. So, or you have to open a sub account and do it there. So a long position with about 60-70 pips profits, and suddenly a short position in case the price would go down to here. Why do we do that? Because if you cannot monitor the trade, or you have to leave, or it's night and you go to sleep, if the price in the end moves down and you still have the long, then you're losing out of this, you know, you don't make any profits anymore. But if it goes down here and you have a short position and a long, if the price really moves down to here and bounces and you get another long setup, it's the range, remember, you just get rid of the short, make in this case about 100 pips, and then you leave the long you have from here still running. You also, remember, you hedged the position up at that point with 60-70 pips. It means even if the price moves 1,000 pips, minimum, you still keep the 70 pips. Okay? So if the price were to go down, bounce, and move up again, you get rid of the short 100 plus pips. You leave the long running, or you can even reinstate it, but forget that for now. You have still the long. And if the price moves up to here, you again make from here to here another 80-90 pips. And the goal should be to make more. What you want to see is the price actually coming out of this range and therefore making more pips. If you have a hedged up position, if you're long here and short there, you have the profits of 70 pips. Okay, Let's imagine the price moves down, in the end breaks support, creates a 1, 2, 3, and then moves lower. What you do here, you get rid of the long position, correct? Keep the short that you have here. If you get rid of the long, down here you're still making 70 pips, right? Don't forget that, because now you are losing about 65 pips or 70 here, but the short makes 120, 30 pips. You still you're still there with 70 pips profits. And if the price then moves lower, you don't have the long anymore, have the 70 pips plus whatever more the short makes. Okay? Now for the long, it's the same scenario. We said it yesterday in the live room. If the price moves higher, like it did now, you can wait for another 1, 2, 3 if you like to make sure it really stays out of here, and then you can get rid of the short, okay, and then the longs continue making profits. And from down here it's only 70 pips at the point because the short is losing, but if you get rid of the short there and the price moves higher, the long continues making profits. You don't do that just for fun. You do that because you have goals, and the goals should come from higher time frames, previous highs here, here, or here, and that is about what, 300-400 pips, and on the monthly chart much more, right? So look at this. If the price moves higher, reaching those highs, it could be, as I said, another 400-500 pips. If it really decides to move higher, then it could be maybe 1,000 plus. So there's a reason. We have a very powerful uptrend. Now we have a range in the wedge, and if the price comes out of here, it could happen that the price moves up like it did before. Like it moved up 2,500 pips with no retracement. Why not again? Yeah, the chart is in your favor right now if we're talking about the longs. And let me go back to the 4-hourly chart. If you hedge up a position, you shouldn't put a stop anywhere, not on the long, not on the short, because the market can go wherever. You hedged up with your 70 pips, okay? Now sometimes if you say, okay, if that breaks out, okay, it will probably go. If you have a little bit experience and say, okay, a breakout here will result in a very big move, and I'm almost 98, 100%, whatever, sure. In this case, okay, you can put a stop on the short somewhere over the highs, and if the price goes and you are not there, it will hit the stop and the longs will keep or start moving profits again. Okay, ideally you monitor this manually, and if you get your 1, 2, 3, the price moves higher, you have your support, you just get manually rid of the shorts. Do you all understand what I meant with this? Or was it too complicated? The hedging part. Are you sure, everybody? Okay, as I said, I recorded it so you can watch it later on. Great. John, did you put a stop in, or did you manually get rid of the short? Hello? I had a stop loss. Okay, so with other words, Is this the entry? Let me check. So this is, so you lost about 60 pips on this trade, on the short, but the long is making about 170. That means this long position now is about 100 pips in profit again, correct? Plus the 2 lots you made here already. That's a very, very powerful trade here. Well done. Let me explain again. On the 4 hour, on the daily chart, okay? What do we see? Support coming from back here. Oops. A lot of support. Support breaks on the daily chart. And then on the 4 hourly chart, you have a 1, 2, 3, short 1, 2, 3, and the price moved a lot. Ideally, you want to look for short setups after a 4 hourly 1, 2, 3, after the 2 to 3 line break in this area. Now, in this case, in this example, the price just dropped like a stone. We had 5-minute entries, but not easy to spot. Okay, so if I check this, I go a little bit back. Look at this. Yeah, you got your another smaller trend line with 1, 2, 3 touches. You get 5. You got your 5-minute 1, 2, 3s. Okay, what you did not get is, okay, it's 8 pips, a 10 pips stop loss spread again. What you don't have is a break of the 633. The price is still kind of squeezed between those levels, and that is never really good. So it's a very aggressive thing, and even the second one is the same. You have another one here, and you get another one. Let me draw it. There we are here. Correct? So yes, tiny stops of 10 plus pips, and then the whole thing dropped. That means first and second lot, you will probably, you're not even at that moment in time, you're not even able to take out the second lot fast enough. You will probably make much more profits than you expected with the second lot, because if something is dropping like this, the broker don't let you close a position usually, unless it's a really, really good one. In this case, it's great for you. If it were the other way around, it was not good for you. Okay, if you were long and it is dropping like this and you don't have a stop in place, or you should have, but if not, then it's trouble. You won't have time to sometimes take out the position quickly, right? But in this case, it's in your favor, so you probably made, instead of 20 pips, I don't know, 100 pips here, and now you have this retracement. So if you get the 2 to 3 line break, if we get this, we can actually do that live, right? It would be a short setup, because you have a 1, 2, 3, and you have also a touch at the 36 EMA, and you have a retracement of over 50%. The problem is that you didn't get the entry where you expected it up here. Now, if you are short, okay, then it's something else already here, but we just assume that we are not. Now, we are looking for 5-minute entry close to the 2 to 3 line break, and this is this area. Down here, it's far away from the 4 hourly or 1 hourly, in this case 4 hourly 2 to 3 line break, okay? And this is actually your resistance line, 1, 2, 3, 4, 5 touches here. And if you get the 2 to 3 line break here, the price is far away also from this resistance line. Make sense so far? That means a steep setup like this, you cannot put the stop over here and have a 100 pip stop, right, on the 5-minute chart. So you have to place your stop according to the rules over the 36 EMA. And with the steep setups, it's always a little bit tricky, but if we want to take the trade, okay, and it's not going immediately, like it's not moving in our direction kind of quickly, it will probably create a higher low and then turn against us. That's why you cannot put a stop over here. You have to put the stop to this area. You risk less than usually. Don't risk 0.5% on an intraday trade like this. Risk less, and if it's going against you, okay, you just get rid of the position and that's it. But if the price actually decides to move lower, look at your daily chart, then you really have bigger targets, right? That means the price could go down 300-400 pips with a stop of 20, and it would be still worth trying this out. Okay, remember, a lot of support. Price comes back to here, you have at least 300 pips to go, maybe even more before it's finding support. And that means you can try, and if it doesn't work, it was not much you risk. But if it works out, the last position will make 10 or 15 or 20 times the stop, and that is still something you could consider doing, right? It's not a bad situation if it goes your way. So what we do, if we get a signal, let's do it. Let's do it. So we practice steep setups, difficult setups, because they're not close to the 2 to 3 line. They are steep but good to practice.